Joining us now, Jay Clayton, former SEC chair and a CNBC contributor, and Kyle Bass, founder and CIO of Hayman Capital Management. Were you in the, I wouldn't say in the Trump administration, but you were sort of SEC chair, et cetera. You could be in the...
Look, I feel good about the Trump administration's
okay, you could be
policies.
in the next...
I feel very good about it.
And you are, I think, I don't know, we talk about a lot of different things. You're a China hawk, no doubt. Do you consider either one of these candidates free trade candidates? Kyle.
So you're saying, do I support unrestricted free trade? The answer is no. Do I?
Don't?
No.
Okay.
I mean, when it gets
is either candidate a free
well, we're going
trade?
to talk about Chinese tariffs. We're going to get into issues of national security.
You think when you hear the one talking point all Democrats use against Trump is that he's going to wreck the economy with tariffs? You agree with some of these tariffs?
I agree with many of them. Notice that the 301 tariffs on steel and aluminum exist today. And the reason those were put on is defend our industries from a state actor executing non-economic transactions to try to put our whole industries out of business.
How about across-the-board tariffs on everything?
Well, I think it's a great starting point. I think it's a starting point to negotiate down from. So I think it's an effective negotiating strategy.
So you don't think it's bonkers?
Yeah, let me jump in and say I agree. Tariffs are just one economic tool, but it's one of the few economic tools, in addition to sanctions, which are a little more circumscribed, that a president has unilaterally. And when a president is dealing on the world stage, economics, national security, they go together. And a president who says, you know what, I'm not going to use tariffs, is giving up a significant
Where does he go
tool.
wrong, Jake? Because does he go wrong by saying we're collecting taxes from other countries and we're making billions of dollars collecting taxes? Because that's not what's happening.
That is clearly not what's happening in all cases. But it is happening in some cases. So for example, when China is dumping goods and you put a tariff on those goods, you're bringing the price back to the natural market clearing price, and we are collecting taxes for that.
Well, what you're basically doing is stopping consumption. People are not going to buy the cars if you tax them heavily enough with a.
You know what?
It's a punitive situation to say we're not going to get this.
Let's look at something that has happened in the post-COVID. COVID, we scrambled all the economic eggs in the world. China was our #1 trading partner. Kyle was here pounding the table saying that is really silly. They're number 4 now?
Yeah.
Because of the different measures we've taken across the board, tariffs, the USMCA, we have nearshored and onshored a tremendous part of our economy. What did we have? We pumped a bunch of energy. We're way up on energy pumping from before
So you're in
COVID.
favor of things like the CHIPS Act and other things that have done too?
I'm in favor of understanding the complexities of the world stage and what is good for America. And when I hear somebody say we shouldn't use tariffs, I'm like, that is a tool that has been used very well.
What about the idea that you shouldn't think that you're going to get a lot of revenue raised from tariffs, that we are doing it as a punitive tool, using it as a punitive tool and saying, okay, we're going to change behavior, we're going to change things and make sure that we're not aiding people that we don't think are helping us or countries we don't think are helping us. But if you think you're going to raise a huge sovereign wealth fund that's funded by that's crazy.
Look, I think it's the revenue impacts are naturally short term because of the adjustments that I just talked about.
Right.
So that is absolutely true. But I mean, think about how much better we have come out of COVID because of our ability to use our economic tools. China's 4th. Taiwan just passed them.
Well, Taiwan just started exporting more to the U.S. than China for the first time since 2002.
Right.
And
it's Mexico
so we're
and Canada.
changing who our trading partners are.
And why is all this? Because we have nimble energy. We're up 40% on gas from when Trump took office. We're up more than a third on oil, and we have the world-leading tech sector. The 5 biggest companies in the world are our tech companies. And when the rest of the world printed money in response to COVID, much of it came back to the United States because of our leadership in tech and energy.